Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the week of May 2nd through May 6th, where we're going to try to help you prep for a FED-tasrophe. So, prepping, if you're not familiar with that term, I looked it up in the Wikipedia dictionary, and they define it, one of the definitions is a survivalist, one who prepares for emergencies. And that's what we want to do in this weekly trading game plan, is we want to help you prepare for and survive a potential emergency, a potential FED-tasrophe. We have the Fed decision and the Fed conference call coming out on Wednesday, this Wednesday, on May 4th at 2 p.m. and we've all seen that often either in the statements, if it's shocking or just not what the market expected or not what the market wanted, or in the press conference something that Powell said will cause FED-tasrophe and the market will react negatively. So we want to help you again prepare for that potential emergency and survive it. So let's get started and we'll help you prepare for this potential FED-tasrophe. Okay, let's start out and see how the markets ended on Friday, April 29th. And we can see, all red, very negative, very declining. All the market indices declined severely on Friday. Again, it's all red. We could see, more decliners, lows, very, very bearish market on Friday, and this was quite a bit of last week. It is possible that the market was already prepping for the FED-tasrophe, particularly at the end of Friday. We see this, dip at close. So, again, very negative. We see the news, worst month since the virus, consumers, savings, rough 4 months. So, some people are saying the worst quarter, worst start of the year. Again, very bearish. We're in a bear market. We've been saying this for quite some time. We could see, oil ran up over $100 again. Natural gas was up over $7. Gold declined, which was a little unexpected, but gave us an opportunity we'll be talking about. And then we see all the markets decline. We see the treasury curves have inverted repeatedly, and they're running about 3%. So we'll again see this all in the futures and the indices, etc. And then again we'll talk about our strategy, or reiterate our strategy for how to play this bear market and how to prepare for this potential FED-tasrophe on Wednesday. Okay, if we take a real quick look at the CNN Business Fear and Greed Index, which shows us a quick gauge of the fear or greed in the market, we can see we're currently between extreme fear and fear, and it's been that way for a week. It was neutral a month ago. So again, April has been, very fearful. We can see several indicators that are showing extreme fear and several that are showing fear. So you can take a look at the details of each of those indicators, but again, the sentiment in the market is fear to extreme fear. And we've seen that this week, and we should expect to see that in continuing weeks. And you can find a link to this Fear and Greed Index in the reference links section of our links category on our homepage at beachbumtrading.com, bum without the U. So again, one of the reference links you can find on our homepage, and check the market sentiment on a regular basis. So we hope that helps as well. Okay, if we take a quick look at the indices in FinViz, and as always you can find our affiliate link to FinViz in the description box below. We can see, on a weekly chart, the market's been in decline. It's a bearish market. We've been saying, for quite some time, we're in a bear market, and we can see April was significantly bearish, declining. It failed at the intersection between the moving averages and pretty much has been down since then. It's approaching the low of March. And we'll talk about, how we're preparing for this potential FED-tasrophe and for further declines in the bear market. And we'll talk in our strategy section, so please stick around to the end of the video. We'll talk about all of our strategies on how we're going to play this bear market and how we're going to prep for this potential FED-tasrophe. So if we look at the other indices, we're going to see a similar behavior. If we look at the Qs, the index on the NASDAQ, we see very similar look, except that it has now broken below its previous March low. So, watch out below. It's, going down. So we don't know where the next bottom is. Here's another support, but it's below its moving averages. So, again, it could go down significantly farther. So please be prepared, be careful, play this as a bear market again, and we'll talk about how our strategies for, how we play a bear market. You can make money. Hopefully you are making money in this decline. There's great opportunity to make money in declines like that. So if we look at the Dow, it's going to be very similar. A DIA, the index on the Dow, it's a little less severe. It hasn't reached its March low yet, but it's again failed at the intersection between its moving averages and is headed down. So again, play accordingly. So if we look at the Russell very quickly, IWM, the index on the Russell, again, small caps are going to get hit harder in this type of bear market. So we see it decline further below its March low, and it's headed down, and the next level of support is significantly below this. So again, expect further decline. So, and then if we very quickly look at the VIX, we'll see the VIX has gone up and is in the 30s again. Again, we'll talk about our strategy, how we're playing this, but with a FED-tasrophe, one would expect, a spike up in the VIX up to this 36 range. So there's a great opportunity to make a lot of money on this spike on the VIX. So we're prepared for it, and we hope you are, and we'll help you in a strategy session on how to prepare for this potential VIX spike on a FED-tasrophe, and also how you can make money on this increasing momentum in the VIX. So we hope that helps. Okay, if we take a quick look at how the sectors performed, industries, etc., on the Groups tab in FinViz, and we've recently released a number of videos on how to use this Groups tab in FinViz, so we won't go into detail about how to use this here. You can reference those videos, and we hope that helps. But we can see, on Friday the 29th, everything was pretty negative, but the least negative was basic materials. So we did see some positive in some of the basic materials, healthcare, consumer defensive. We can see again for the week, energy, consumer defensive, technology was back and forth. And what's particularly interesting, and we want to focus on again this bear market, if you're looking for long opportunities, consumer defensive, energy, utilities, we've seen that theme for several months, which we can see in the 3-month chart. Energy, basic material, utilities are the greens, technology, communication, consumer cyclical are the reds. So again, if we want to play long, we want to play with these sectors that have a upward trend, and then if you want to play short, technology, communication services, and again we just saw that in the indices as well. So if we quickly look at the industry breakdown for the day, we can see really again precious metals, some of the miners, gold performed okay on Friday. Although we should see gold is a little negative. We'll see some of the other precious metals in the futures. We see the most negative, again, technology, software, semiconductors, internet retail, etc. So for the week, a lot of energy, coal was back and forth. It was interesting, trucking, I looked at that a little bit. For some potential opportunities, and again the most negative for the week is going to be mostly technology types of things. So finance we saw was negative, and then again for the month we see coal was positive. We see again consumer staples type things, beverages, etc., consumer defensive. Again, we see farm products. That's been a theme we've been talking about for some time. And again, then the most negative for the month is going to be mostly technology. So we want to keep a focus on those industries that are in the direction you want to trade. If you're trading positive, consumer defensives, etc., energy has been positive. If you want to trade bear, then technology, software, again, and unprofitable technology and software would be the most bearish. From countries, China relaxed some of their crackdown on technology stocks, and that had a little bit of a bounce on Friday. We'll talk about there's an opportunity we think in there, and we'll talk about our strategy for how to play that again. And then we see for the week UAE and China, so energy, oil, and again the China thing. And then for the month, it's kind of mixed. So we hope that all helps, and let's continue. Okay, if we take a quick look at some of the economic data highlights from last week, and then what's coming up for this week, and again, the past week it was more driven. The market was more driven by earnings, and we'll talk about that in a second, than the economic data. But we'll see on Thursday the jobless claims data. The continuing claims was a little bit worse than forecast. The GDP, it actually, the headline number showed a recession, the start of a recession, because the GDP was actually negative. You'll hear the commentators were kind of discounting that as if you remove the imports data, then it was not negative, but we'll talk about again this week and going forward. What does that mean? Are we headed for a recession? What does that mean? How do we prep for this FED-tasrophe, for a potential recession, etc.? So if we spin through the economic data from last week in investing.com, and again, you can find a link on our homepage to this site. So if you I like this to scroll through and see the reds and greens, and again, we post this data as it comes out in the Surf the Markets Reports channel in our Discord, which we'll show you in a second. But again, we see some durable orders was a little positive on Tuesday. Housing was okay. Consumer confidence from the CB was a little below. Home sales a little below. Again, this is a quick way to see just the reds and greens. Oil inventories was positive, but we saw oil prices go up. So the oil inventories, the inventories for natural gas and oil, and the Baker Hughes rig count doesn't seem to be affecting the oil and natural gas prices as much as one would expect. So that tells you there's a possible opportunity disconnect with the data in those areas. And we saw this GDP was negative here. It was expected to be positive, so that was a little bit of a shock to the market, which was already, in a bearish sentiment. Then we saw jobless claims. Initial was as expected, but continuing was a little bit worse than expected. So again, kind of negative. But again, and then we saw the Michigan consumer confidence on Friday was okay, a little positive, but expectations were a little negative. So now let's look at the economic data plan for next week. Okay, let's talk about the major economic data that we received last week, and then we'll talk about what's in the upcoming week. And just as a quick reminder, please see the Surf the Market Reports channel in our Discord. You'll find a link to our Discord in the description box below, where we try to post near real-time economic data as it comes out. So you'll see as the economic data is released, typically I go to investing.com and I will copy out the results of that economic data as quickly as I can and post it in this Surf the Markets channel in our Discord, so you can quickly be alerted that it's what the results are and take a look, and then we'll talk about the implications, and we can discuss that in that channel as well. So again, I'd highly recommend you check out the Surf the Markets Report channel, join our Discord, and you'll get near real-time economic data that way. Okay, if we quickly look at the economic calendar for next week, and again, the highlight's going to be the Fed press conference and statement on Wednesday. So I expect that the rest of this data will not be factored in very heavily. People will be waiting for this Fed decision on Wednesday. Again, we get, some confirming data, PMI, ISM type data on Monday, Tuesday, factory orders, jolts, etc. But again, I don't expect that to change the sentiment. Again, the sentiment in the market is very bearish, very negative. So now we'll talk about our strategy in a few minutes. And then on Wednesday, again, I expect the market to be just, essentially waiting for this Fed decision. And then on Thursday, we get our typical jobless claims, and Friday, but again, it's going to, and then Friday we get payroll. But again, I think everything is going to hinge on waiting to hear this Fed decision on Wednesday. Now, everyone expects a half-point interest rate hike, and we'll see that in the expectations. Again, we expect half a point hike. We expect them to announce their quantitative tightening plan, and they've already said they're going to start letting bonds roll off their balance sheet and potentially selling bonds. We expect them to be selling bonds, and that to cause further pressure. So there we see that the general expectation is for half a point hike. Now there has been talk of a 0.75% hike, but then that was several of the Fed officials kind of discounted that. But now kind of the expectation is for a sequence of half point hikes. And we can see here's the calendar for the FOMC meetings, so you can see the upcoming FOMC meetings. And again, this calendar is accessible as a reference link in the link section off of our home page, so you can go to that reference link section, get to this Fed calendar. You can see exactly when the FOMC meetings are. So we see here's our upcoming meeting for this week. Then we've got June, July. There's no August, and then there's September, November, December. And again, the discussion is that there will be a sequence of at least half-point interest rate hikes in these meetings, with the potential, people are saying and have been saying for quite a while that the Fed's behind the curve, and they may have to raise even more aggressively. And Powell's come out and said that too. He's been very hawkish. They've all been very hawkish. Last week's game plan, we talked about how the Fed hawks are circling and how you could prepare for that. So again, even if this comes out as expected, I think the market's going to react negatively, and we're going to have this, FED-tasrophe. Even though everyone expects a half-point hike, when they actually come out and announce it, when they actually come out and say they're going to sell bonds, I think the market's going to react very negatively. Again, this is my opinion, not financial advice, but again, we want you to be prepared for this potential FED-tasrophe on Wednesday, and the market reaction to just the announcement of what everyone already knows. So. But be prepared. We will, again, talk about some strategies of how to help you prepare in just a second. So we hope that helps. Okay, we saw this past week that a lot of the market decline was caused by earnings. Amazon, Apple, etc. Netflix, we saw the major decline based on either them missing some aspect of their earnings or coming out with poor guidance or anything negative said in the conference call. Again, we're in a bearish market, so people are looking for any excuse essentially to dump or drive a stock down. So if they miss any of their numbers, if the expectations going forward are not as positive as the market had wanted, even more so than the expectations, they could meet expectations, but if the market really wanted better guidance, better future opportunity, it got hammered. So earnings matter again. We've talked about this for some time. There's more strategy in this game plan that I'll put in the links in the description box below about how earnings matter, how you play earnings for sympathy plays, etc., companies in the same segment. You'll also see we're now receiving the earnings calendar, a graphic of the earnings calendar from Benzinga Pro, and we're posting that in our Surf the Markets channel in our Discord. And you can also get a link to Benzinga Pro if you're interested in that on the trading tools links category on our homepage. So again, we'll post that graphic in the Surf the Markets channel on our Discord, and you can also see the details in investing.com, and also again a more detailed view on the Markets tab in Webull, which we will show in a moment. So again, earnings matter. So here's the calendar for earnings, IPOs, etc. in the Markets tab in Webull for a very near-term look. And again, earnings matter, so we want to look at who's got upcoming earnings and be prepared for what they might say and how that might impact stocks we own, stocks we're looking to buy, sympathy plays in similar sectors, etc. So again, please go see the details of how to play earnings in this previous video, and we'll continue. Okay, if we take a very quick look at additional data we can find on the Markets tab in Webull, we see the histogram. We can see a more significant block of decliners, longer tail in advancers, again indication of the bear market we're in. We can look at the net inflow, and we can see there was a little bit of a pop in the Nasdaq, and then it just tanked. And on the other hand, we had more of a inflow in the NYSE towards the end of the day. So that's kind of interesting. And again, we'll talk about how to strategize that in a minute. If we look at the best performing industries, not necessarily for just Friday, but for the week, we're going to see energy, coal. We talked about. We saw household goods a little positive. A lot of negative. Construction is kind of mixed. Beverages a little mixed. We saw, okay, so there's the reopening was negative. And then if we go and just kind of look at, we don't expect a whole lot of positive. We're going to see, down on the Dow, down on the S&P. So you can also see the ETFs that are most popular there, up on the VIX, down on the Russell, etc., down on the Qs. So you see the top performers are all negative, they're all down. Industries will look for any green, a little bit in basic materials, consumer sentiment, or cyclical, all red. Commodities will see some in basic materials, precious metals, etc. Precious metals, energy, agriculture. So again, confirmation of those sectors. Then we see tips bear, municipal bonds. We also talked about I-bonds a couple weeks ago, and that's another option to play for a hedge against inflation, a hedge against this kind of FED-tasrophe of increasing interest rates, etc. So we hope that helps as well. Right now, as of the filming of this video, Webull is offering 5 free stocks when you open and fund an account. Typically they offer 2 or more free stocks, but sometimes they have special promotions, so please check our link to Webull in the description box below. You can also find on the About page or the header of our YouTube channel, BeachBum Trading YouTube channel, and or in the link section at the bottom of the About page, and or in the links section under trading platforms on our homepage, beachbumtrading.com, bum without the U. And again, if you use our affiliate link to Webull, you can currently get 5 free stocks when you open and fund an account, and you can see those stocks can be up to $3,000 upon funding your account. So we hope that all helps. Now let's take a quick look at the futures and the futures tab in FinViz. And again, we recently released a video on how to use this futures tab in FinViz, so I won't go into that in more detail. We're looking for, opportunities to either long or short anything that's overextended. We can see the declines in all of the markets. We see the S&P is approaching and threatening its March low. The NASDAQ is broken down below. The Russell is very negative. We see the elevated VIX is increasing. So again, and here's our spike we talked about. We'll talk about how we're playing that probably in part 2. But our strategy, as always, is to try to catch that spike in the VIX and play that retracement back down. Pretty much almost guaranteed profit opportunity there. We can see oil's been kind of neutral. It's been bouncing around 100. And natural gas has been hovering around this $7. It went up to 8 and came back down, and now it's hovering at 7. A little indeterminate which way it's going to go right at this point. We see gold decline. This presented an opportunity. We see it kind of bottomed and then is hopefully turning back up. Same way with silver. We can see there might be a little bit more downside in silver, and then we're hoping for the bounce there. We talked about last week how we wanted to play this decline in platinum. We see it got a little bounce on Friday, but we're still seeing an opportunity there. Copper hasn't gotten to its bottom, but we see palladium did that similar bounce. And then we see all the ag products have been running high, and unfortunately we don't have a good way to short most of those ag products using ETFs. But again, anything that's overextended is an opportunity if you want to short individual stocks, and we've shown you how you can identify those individual stocks if you want to short them. And we also talked about these opportunities in the Forex market, this inverse correlation between the US dollar and Japanese yen. We also see the Swiss franc. There's been discussion about how the euro decline has caused this strength in the dollar, and strength of the dollar negatively impacts commodities in general. So this run up can be attributed to some of the decline in some of the commodities like gold and silver. So we hope that all helps. And now let's talk about, how can we prep for this potential FED-tasrophe? What strategies can we use? How can we be prepared to survive potential FED-tasrophe? So how do we prep for this potential FED-tasrophe? What do we expect for the markets for next week? Well, as we mentioned, most of the focus is going to be on this Fed meeting on Wednesday afternoon. So there'll be a lot of people just kind of waiting for that confirmation of the decision. We know they're going to hike interest rates, etc. Now again, we're in a bear market, and we just had a major decline as we saw in the futures. And sometimes in a bear market, as the inverse of a bull market, you get these, what they call face-ripping rallies. Bull rally, spike up, but the overall trend is down. Since we had such a major decline on Friday, to get a bounce briefly on Monday would not be unexpected. But again, we're in a bear market, so the trend is down. So there are opportunities for day trades, momentum trades, short-term scalps, etc. Just keep in mind that we're in a bear market. So sell the rip, don't buy the dip is how you play a bear market. We've had several videos we've been talking about for some period of time that we're in a bear market. So please see these previous videos. How to make money from a bear market, how bears make money, how we're playing rising interest rates. Again, we expect the Fed to raise interest rates at least half a point for several sequential meetings. We expect them to be letting bonds roll off their balance sheet, probably selling bonds. So the bond market, we've been saying for quite some time, we expect the prices to continue to decline until the Fed pretty much finishes selling off, or at least that plan is clearly understood, and then we can play a potential upturn in bond prices going forward. Also, last week we talked about, other strategies with the Fed hawk, so the very hawkish turn in the Fed. We talked about some strategies on how to play that as well. In general, again, we talked about how, we're looking to catch a spike. We have buy orders sitting out on SVXY to catch this spike in the VIX. So if we get this FED-tasrophe on Wednesday, the market panics, we're going to catch that spike in the VIX using SVXY and ride that retracement down. Very similarly, we saw in the SPY, it's approaching this bottom. And we'll talk about part 2, and we've talked about before how we're now looking at VOO and using that. So we have buys at this level in VOO to catch this bottom in the S&P 500 and then long it going up, because again, in the very long run, the markets tend to go up, and this provides a nice risk to reward profile to make a profit in the long term view of the market. And again, we've got buy orders just waiting, sitting there at that low on the S&P to catch that FED-tasrophe. So if the market panics on Wednesday, we're going to catch the VIX spike and ride it down. We're going to catch the bottom in the S&P and ride it up. So that is part of our strategy for playing and prepping for this FED-tasrophe. Again, the goal is to survive this, to be prepared for it. We hope that you all are. There are plenty of ways to make money in this bear market, and we've outlined a number of those in the past, so we hope you will review those. If you have any other ways to prepare for this potential FED-tasrophe, other ways to make money in the bear market, we would love to hear about it. Please put it in the comments of this video. Join us in the Discord, and let's discuss them all, and also in our Facebook group. So we hope that all helps. The content of this video was produced by BeachBum Trading. We hope you will choose to also join us in the BeachBum Trading community and subscribe to our YouTube channel. Visit us at our homepage at beachbumtrading.com, the bum without the U. Similarly on Twitter, BeachBum Trading, bum without the U. On Facebook and in our BeachBum Trading Facebook group. Please follow us on Pinterest and on Instagram. All of the links to our social media sites will be included in the description box below, and we hope you will choose to subscribe to our BeachBum Trading YouTube channel and follow us on social media. Thank you. We also cordially want to invite you to our new BeachBum Trading Community Discord server, where we can have discussions on all topics related to trading, success in trading, investing, etc. You can see alerts when we make trades, changes to our watch lists, etc. So again, please join us in the new BeachBum Trading Community Discord server. You should be able to find a link in the description box below. You could also find a link in the social media category on our webpage, beachbumtrading.com, without the bum without the U, and also in the link section on the About page of our YouTube channel, etc. So again, we look forward to seeing you in the BeachBum Trading Community Discord server soon. Wave and say hello. We hope that you like our weekly game plan for the trading week for this week. Thank you for watching the video to the end. If you found this helpful, we hope that you will choose to subscribe to our BeachBum Trading YouTube channel, and please click the bell icon below to automatically be notified whenever we publish a new video. Please also share this with your fellow traders and friends via the share button included below. And let us know if you found our weekly game plans helpful in the comments included below. and let us know how we can improve. What would you like to see more, less of, etc. Thank you again for watching. Good luck and have a great trading week. Bye. If you like this video, we hope you will choose to subscribe to our YouTube channel by clicking on the box in the upper left hand corner. You can watch another video like this by clicking on the box in the lower right hand corner. And we have a whole playlist of videos like this that you can access via the box in the upper right hand corner. Our latest video is available in the box in the lower left hand corner. We hope you like this and have a great day.